Hi everyone, welcome back to another episode of Sunday Stock Scan. Today is the 16th of October and we'll get stuck right in. We'll start off with the S&P 500. So not much has changed really in my short to medium term forecast from last week. If you were watching the market kind of tail end of last week, there was some pretty volatile movements happening. We had an intraday movement of just under 5% on Thursday, and a 3% candle on the Friday. For an index as big as the S&P 500, these are highly, highly unnatural moves, but we are living in unprecedented times at the moment, so nothing should be unexpected. Just to reiterate, I'm looking for price to come down and test the highs from before the COVID crash. We're not quite there yet, but that's fully where I expect price to trade, and I do think that buyers will step in here and we'll see quite a considerable bounce. Don't think this will be where we see the bottom or a reversal point for a new bull market, but I do think we will see buyers stepping in and a sustained rally like we've had here and like we've had here. Moving on, we'll look at the Nasdaq. So the Nasdaq is the same as the S&P 500 in the fact that we're still in quite a nasty bear market. From the all-time high, we're currently trading down 36%. So if you had bought in here and you're still holding your positions, you've lost 36% of your original value. Crazy. What's different about this chart compared to the S&P 500, however, is if we look at a Fibonacci retracement from the COVID lows to all-time high, price is sitting very nicely on the 61.8% retracement level. For anyone that's unfamiliar with Fibonacci, we call this level the golden retracement level. If you're looking for a place to enter a stock on a pullback, the 61.8% retracement level is a fantastic area to be looking for entries. Of course, we need something else in confluence to give us more confidence in our entry point, but it's definitely worth watching. I am in the same mind frame as the S&P 500. I would like to see price come down and test the COVID high level for at least a bounce, but worth watching over the next couple of weeks and seeing how this develops. We've got the SQQQ in the watch list this week. This is an inverse index, which basically means when the QQQ stocks are seeing downside, this index will see upside. So if we look at the weekly chart, you will see that since pretty much the inception of this ETF, you have seen crazy downside. So now, for me looking at it, I'm thinking that there is potential here for massive upside. This would imply that we are just beginning the bear market in the overall indexes. So if you're long, close your eyes now, because this could get messy. Zooming in a bit further, you can see this area I've got highlighted here. It's acted as resistance. We've got these big rejection wicks. Prices come down, bottomed out. So this would be in confluence with the all-time highs on QQQ. Would price come back up, another rejection on this level. Price comes back down, and it's come back up. And last week, we've tested it again. We've got this massive upside rejection wick, but I think that in the coming weeks we are going to see a break of this level. What would get me really interested in some short positions and even seeing if I could buy some shares of this ETF would be if we got a break above, a quite substantial break above, and then price coming back down to flip this level into support, and then seeing further upside from there. I would be entering a long position here with quite a tight stop loss, and we'd be targeting maybe this level here. So we're looking at like a 4.7 risk to reward ratio trade. That's what I'd be looking at personally, but there's lots of levels here you could take for targets. So like these other indexes, I'll definitely be keeping an eye on this one. Moving on, we've got the FTSE 100. So was it last week before? I think it was maybe 2 or 3 weeks ago. I'd highlighted that the FTSE was creating this pennant shape. We had a huge run up from the COVID lows. Price was finding it hard to break past this level, which made this into resistance. And then we never even reached the level again. We just have this downsloping supply line, upsloping demand line, and I'd said that we need to watch out because we've not seen bear markets in FTSE 100, whereas the US stocks were getting hammered. We've had the whole debacle with the Great British Pound and the mini budget that was called by the new government. So the UK markets are looking pretty choppy. If we go into the daily time frame, we can see it in a bit more detail. What I did notice though, although I'm overall bearish in this market, we can see a bit of a downsloping, a falling wedge pattern forming, like that. If we just make these lines a bit thicker. So we've got this falling wedge pattern and potential for triple bullish divergence on the MACD. So we'll be watching how this develops over the next couple weeks. We'll be watching either for a break to the upside or a break to the downside, which would show us that we are in for some further downside in this market. Moving on, we've got the GDXJ. Now this is your ETF for junior gold miners. In last week's update, I'd shared this falling wedge pattern. We got the breakout, which appeared to be a fake out. It was only a small breakout of the downward sloping supply line, but already price is retraced, and we're looking to come back down now and test the lows from September of this year. If you're invested in this space, close your eyes right now, because if we lose this level here, then the next thing we could be visiting is the COVID crash lows. There's no support anywhere between here and there, and that'd be a gnarly 28% drop. So this is only an ETF. If you are invested in junior gold miners, the individual stocks will get hammered even more because they're leveraged compared to the ETF. So if you're invested in this space, fingers crossed that you get a bounce off this low, because if not, there could be some blood in the street. Personally, at the moment, I'm not invested in this space. I do hold physical metals, and I do think that in the next few years, I'll be looking to buy more. I don't want to hold my net worth in sovereign currency because it's fucking useless, and the governments that control it are fraudulent, corrupt bastards, and I would much rather hold something physical in my hand that I could control and not get frozen if I was to speak out against a certain government. But that is a conversation for another day, so we'll move on from that one. GLD is similar to the Junior Gold Miners Index. We had this large range here with a double top, and then we had the support which has been broke back above, and it's broke back below. Same sort of scenario. If we lose these lows, then we're looking to trade back towards the COVID crash lows. That would be, I think it's a drop of 10%, but it's still quite significant. So we'll watch this week and next, and we'll hope that this low holds. But if not, we'll have the opportunity to load up on some cheap shares when price trades back to this level. Moving on, we've got XLU. This chart, it's a great example for technical analysis. Where to start? So let's just look at the price chart. We'll take the MACD off. So obviously we've got this massive support level. Acted as support in September last year, acted as support February this year, acted as support June this year, and then we had the run up. We took out the all-time highs. We had the deviation above, came back down, deviated above again, and then massive downside. this deviation here, this is where the market makers will be looking to trap late longs. So we get to the all-time high and we retrace back to support. People think to themselves, no, this is it, it's going to break down, comes back up, gets to all-time high. People are thinking to themselves, we're missing out here, we need to get involved. They'll start entering longs, price will come back down, it'll trigger their stop loss. They'll be in despair, but they'll think to themselves it's okay because price has reversed to the downside. Price will come back up, comes back above this level, people jump back in again because they don't want to miss the run, and then they get absolutely hammered. That's just how the market works. What we have seen though is this support level has been broke here, and price has come back up and has rejected the former support, flipping it into resistance. I'm fully expecting to see some further downside on this chart. The next level of support isn't until the 58 level. Below that, you've kind of got weak support here, here, and here. But really, we could potentially be seeing the COVID lows again. That would be pretty messy if we got down there. But definitely a chart to be watching in the future. Moving on, we've got HMY. This is a mining stock that I've had on my watch list for quite a while. I was trading this back. When was it? Yeah, kind of early 2022, late 21. There was some good upside moves captured on this stock, but we've seen some really kind of sustained downward pressure. Last week I identified that after selling off, we got a perfect touch of the 61.8% retracement level right here, with the classic bearish divergence. So for anyone unfamiliar with divergence, this MACD indicator is essentially a momentum indicator. So with the size of these islands, so the green islands kind of symbolises movement to the upside, the red island symbolises movement to the downside. The higher the island, the greater the momentum of the move. So when you see that the indicator has made new highs, whereas the price has made lower highs, you're seeing a divergence in the direction of these indicators, which signifies a potential reversal. So with the 0.618 and the developing divergence, I entered a trade here, stop loss just above these highs, and I'm targeting the lows. Nice 2.5 risk to reward trade. So that's currently running in profit. We'll be watching this over the next kind of couple of weeks, but I'm hoping to close this one out quite quickly. We'll see what happens with gold and the wider precious metals market, but I do think this one sees the lows again and then possibly further downside. Next up, we've got Denison Mines Core. Now, this chart here, we take a little bit longer to talk about this one. My bias has flipped on this chart quite a few times. I'm going to take us on to the weekly just for a quick look. Now, first of all, when I was looking at this, I was thinking to myself, this looked like a kind of big period of accumulation here. From June 2015 till 2020, we had big accumulation, big run up, 500% gains if you held to the top. But now I'm thinking about it. First of all, we can identify we've got this downsloping supply line here. Fire that in. We can see, take this accumulation zone out just now. We can see we've got this sort of support level here. And if we go down onto the daily, this is where the kind of real details are. Here we've got an ascending broadening wedge pattern that's forming. Now, these patterns tend to break to the downside. So what I wanted to show you with this chart is if we go to the fixed range volume profile from the lows to the highs, the point of control, which if you're unfamiliar with the fixed range volume profile, it simply shows where the highest volume was traded over a certain range. So at $1.10 we have got the highest volume in this range. We call this a point of control. So price is currently literally on the point of control, to the cent. So for me, I think there's further downside in this chart. And what I'd be looking at trade-wise is, I'm just going to put a horizontal line to signify the point of control. I think we get a break of this broadening wedge formation. Price is going to come back up, and it's going to retest the point of control and retest the upsloping demand line. We're then going to see price come down, bounce around this level for a bit, break under, come back up, and turn this support zone into resistance, and then we're gonna get further downside from there. That is my prediction, and I would be confident in entering a trade here. I'd be taking a short position. This would be my trigger right here if we got the retest of this zone, and I'd be keeping my stop loss quite tight, either above this wick or above this higher wick here. Zooming out, we can see that the next volume shelf isn't really until about here, but really we're talking down here, down in the 30 cent zone. But target one would probably be around here. So we're talking, a 2 RR trade, but you can make that bigger if we bring this down, make it like a 4 RR trade. So this is one that's going to be my watch list for the next couple of weeks, see how that develops. AMD, this one been absolutely hammered, obviously from all-time highs, just like the rest of tech. We're currently down 66%, so massive drop. But we are currently sitting at these previous highs. So if we just go back in time, we can see that we had resistance here, came down, and then consolidation, almost a bit of accumulation rather, and then break to the upside, and then we saw the massive run to all-time highs. Prices come down, and it's now sitting on this volume shelf. We do have potential divergence on the daily time frame. So, and earnings also coming up in 2 weeks' time. So this one, we could potentially see some relief from the selling. It could be worth a long. We'll have a watch and see how it develops over the next couple of days, and judge it from there. Moving on, we've got ACHC. This one I spoke about last week as well. I'm currently in this in a small position for a short, but my entry sort of trigger is a break to the downside of this ascending wedge. So, smallest position at the moment, looking to add quite heavy if we get the break to the downside. Zooming out to the weekly chart, just to go over this again, you have price coming up and testing the previous all-time highs. I mean, just to show you guys what can really happen in trading or investing, it's a pretty brutal game. If we take a date and price range from the previous all-time high in August 2015 to the COVID lows, right? It was a 5-year time span and a loss of 86%. So if you had bought shares of ACHC at this point and you held on them all the way down to here for 5 years, you would have lost 86%, and you would have had to have waited a further near enough 3 years to just get back to break even. To me, this looks like a massive double top. We've got the rising wedge with the confirmed bearish divergence on the weekly time frame. On the daily, we have developing. If we take this small green island from the peak, it's developing bearish divergence. Take this line out. Don't read that. Yeah, developing bearish divergence. But yeah, going to watch this one, and hopefully we get the break to the downside. What would be great is if we got the break and then a kind of retest of this level that's been bouncing around that for a while, and then from there we see the downside. So target 1 here, target 2 the bottom of the wedge. MATX, this one here, we had resistance turned into support, come back down, tested the support level, price trading in a falling wedge pattern. We've had the breakout, we had the triple divergence, very technically sound chart, running in profit. We've got our first take profit here and our second take profit here. We've got this kind of down sloping supply line, so we might even come up and test this. This chart here this stock here rather. It's profitable, and it's also got a very small PE ratio. So fundamentally, this is quite a good stock as well. So yeah, this one was identified last week, and it's running in profit. So we'll keep an eye on that, and then we'll update accordingly. Moving on, AMC. Spoke about this one last week. I've slightly changed the chart since then. We're still waiting to see if this this MACD divergence confirms. I thought we'd already had the breakout of the falling wedge, and then we're almost looking at like a kind of retest. But I think we can move it out. We've got more touches if we move it out now. Price is still at this previous support level. Obviously, if we see sustained kind of downside, then we're not going to be looking at this for a long. But these stocks are so unpredictable. You can't really put all your eggs in one basket, because I mean, look at some of the moves up in this from here. 450%, which is just insane on a stock. 130%, even from this bottom here to the top. 184%. So the moves are quite mad when they happen. So definitely will not be ruling out taking a trade on AMC in the next week or two. Paycom Software. This one here is in a massive ascendant broadening wedge. So the price objective usually for these wedges when they play out would be the bottom of the wedge. So if we take a fixed range volume profile, what we'll do is we'll take it from the COVID lows rather than taking it from the bottom of the wedge. But we see that the point of control, we've got a volume shelf here, right here, and then we've got the point of control right here. So this would be where my kind of final target would be if I was to trade this. But definitely be cool to see how this plays out technically, because these patterns are quite interesting. I've seen a few of these before when they've broken to the downside. We've seen quite sustained selling. So we'll keep an eye on this in the next couple of weeks. Nvidia, another chart I wanted to show quickly. This chart here, it sort of shows the different cycles of a market, and this chart kind of plays out to an absolute T. What's interesting is this median line, how well it's been respected over the past 5 years. It acted as resistance. We had support. We blew through the support, turned it into resistance, and now we're trading down. I think we're definitely almost in the despair phase. There's going to be a lot of people who have been holding this stock a long time, down 67% from the highs. I think soon we're going to be seeing some capitulation selling. People not seeing any way out. They don't see any upside, and you can bet that in the next couple of years, you're going to see, I guess, maybe around, say here for example, you're going to see like a big accumulation happening of this kind of company. You're going to come down, and it's going to bounce around. People are going to get really bored, and they're going to sell. Institutions are going to be swallowing this up, and then you're going to see it's going to take off. That's what I think is going to happen anyway. So Nvidia, keep an eye on it. Nvidia and AMD, two similar companies, and two companies which I think long term massive potential, but short term I think there could be some really shady and shit price action which is going to put a lot of people off. Last two, we've got Pinduoduo. This company here, didn't know anything about it until I done a bit of research earlier. Think it's like a Chinese company that allows farmers to sell directly to their customers, but technically I think it looks shit. We've got the rising wedge. There's no divergence playing out, but we have broke below this wedge, so personally I'd be targeting the bottom of the wedge. I'm not going to be taking a trade on it just because there's no other indicators in confluence, and it goes against my trading strategy, but it's trading below the 200 and the 100 day exponential moving average, so I don't think that this is going to see any upside for at least a while. Last but not least, we have Philips. Just wanted to highlight this chart quickly at how brutal it has been. Philips obviously massively known medical company, makes toothbrush, razors, whatever. But in the past, since April last year till now, so just over a year, but a year and a half, 7 to 8% downside. Just brutal. Just brutal. But there's a lot of examples of this in the market at the moment. Anyway, that's going to wrap it up, guys. That's pretty much everything that I've got on my watch list this week that's kind of shown anything interesting. Apart from the trades that I'm actively in, which would be ACHC and MATX, I'm not thinking about entering anything new. Keep my eye on AMC, and then obviously keep my eye on the wider markets for sort of directional bias. But at the moment, yeah, that's it for me. Thanks for watching. If you'd like to see me look at any particular tickers, or you'd like to see any specific content on this channel, please leave a comment and let me know. It would massively help me out. Thanks, guys. See you later.